Hello, all eyes are on the Fed this week and on its possibility to raise interest rates. People will also be looking at its forward guidance for the rest of the year. This decision may come at a delicate time for the Fed, given that some risk assets are showing signs of reversing. We'll first look at Eurodollar. Eurodollar on this hourly chart on a FinGraphs platform gives the perspective over the next 2 to 3 weeks. It's interesting to see that the Eurodollar has started to correct up despite the looming decision on the Fed, which should normally advantage the dollar. The trend is now in a bull and has the potential over the next few weeks to move up back above 108, possibly almost to 109. The risk index is in the middle of the range, telling us that it is more potential up before a risk situation materializes. Looking at it on a daily basis, or the perspective over the next 2 to 3 months, we can see that we are now in a correction up. The risk index is oversold for a second time and seems to be now moving higher. We could see that the target for this correction up could be in between 108 and 110 over the next few months. Finally, the weekly chart of Eurodollar is still heading lower. It has, however, almost reached its potential, somewhere between parity and 108, and the risk index is heavily oversold and slightly turning up. It is now starting to leave the oversold situation. Looking at all three charts together, so we have a long-term downtrend which is nearing exhaustion on a weekly chart. We have a daily chart which has started to turn up and is showing some potential over the next couple of months. And we have an hourly chart which has started its reversal up and is moving up quite quickly with potential towards 108 and 109 over the next few weeks. It's also interesting to look at Brent, and Brent has started to correct since the end of last month. It is now on this hourly chart, or the perspective over the next 2 to 3 weeks, in a downtrend. It has reached initially its potential and its risk index is oversold. But we are now in a bear, so we would expect a bit of a bounce here, but that the downtrend is likely to continue. Giving it a bit of scope, we look at the daily chart, or the perspective over the next 2 to 3 months. The correction down is seen as being able to continue another few weeks and possibly make it below 50 down to 46, 47. The risk index was very overbought and has now reversed down. Looking at the weekly chart, we can see that the correction up that lasted since early last year has now entered its corrective up target, and this corrective up targets actually offered quite strong resistance, and hence the current retracement that we're seeing and that we just saw on the daily. Looking at it over the 3 investment horizons, the weekly has been correcting up, has hit resistance and is now retracing. The daily is showing that this retracement could possibly last another few weeks and lead us below 50, possibly down to 46. And the hourly has rapidly corrected, has possibly reached an intermediate bottom, but is still in a downtrend for now. Now looking at equity markets, we could also see a sign of weakening. This is the hourly chart, or the perspective over the next few weeks. It has started to correct down. It is still at a high consolidation level for now, but if it were to move below its corrective targets here, so below 23.43, we could see an acceleration down. Looking at the daily, we could see that the daily was and still is overbought, and that it had reached its impulsive targets up between 22.50 and 23.32. We could also see that our envelopes are at stress, with the smaller envelope hitting against the larger envelope. All these are signs of exhaustion of this move and could lead into a retracement over the next couple of months. Looking at the weekly, or the perspective over the next few quarters, we see a similar picture. The targets, impulsive targets, had been achieved, hence the impulsive done notification here. The risk index isn't overbought, and this also shows us that we may be on the verge of starting a retracement down. Looking at all three charts together, the weekly is overbought and exhausted, the daily is overbought and exhausted, and the hourly may have started to turn, and we'll be looking to the 23.43 level to see if that could start to accelerate down. We could also corroborate this risky situation looking at a few other assets. First, the high yield market, and seeing that although we do believe that the weekly still has potential towards the end of next year, the daily seems to have started to reverse. It had reached the lower end of our impulsive targets up, and the hourly has rapidly turned down. We also see here an intermediate bottom, possibly a bounce, but we are now in a downtrend for the next few weeks. We could also look at emerging markets. We had been moving up on our weekly chart and have hit the resistance of the upper end of our corrective targets. The daily chart had almost reached its impulsive up target, and we can see that the envelopes had touched each other. The risk index is slowly reversing, so this may mark the end of this move up for now. And the hourly chart has also started to reverse down, a bit of an intermediate bottom here, but we are now possibly in a downtrend for the next few weeks. Finally, looking at industrial metals, which had also been quite strong, although we also do see further continuation of this trend towards the second half of the year. We believe that over the medium term on the daily, we are also getting exhausted. We can see our envelopes touching each other, our targets had been achieved, and the risk index started to reverse down, not too far from the overbought zone. The hourly has also started to reverse down, a bit of a correction here, intermediate bottom, but it's now in a downtrend which could possibly last a few more weeks. And thank you very much. That's all for today.